timing though. Let's move to a CNBC TV18 exclusive. Indian Hotels Company, well, that's in focus. The stock is up more than 80% in the last 1 year. The company reported its best ever revenue, EBITDA, as well as margins in Q3. The question is, what's the way ahead? To discuss this and more, we have Mr. Puneet Chhatwal, the MD and CEO of the company, who joins us on the show. Hi, Puneet. Good morning. Always good speaking to you. Well, let's get a couple of aspects out of the way. Q3 was splendid. How's Q4 shaping up? And what's the way ahead, particularly on the ARR front? Your shareholders are cheering, but we are bearing the brunt, I think. Tell us more.
Morning, Nigel. I think the sector is in for a very long innings. And if we are getting close to a century, I think you can expect double or triple because there is an imbalance between supply and demand. While demand remains strong, the supply remains constrained. That's number one. And number two, in the case of Indian hotels, are not like-for-like growth is very strong. We indicated we'll open 20 hotels by the end of this financial. I think if we add our recent tie-up with Tree of Life, we could say easily we are at 30. And going forward, I don't see this number getting less than 2 to 2.5 hotels a month in the next fiscal. And as most of it is driven by management fee business, I think we just keep adding to the top line and we keep adding to the margin expansion, and eventually the flow through remains stable.
Puneet, hi, good morning. And as always, it's great speaking to you to understand trends in the sector. Now, the whole wedding business has been booming, right, over the last couple of years. Especially now, it's one of the best in the last many years. And Prime Minister Modi has come out and encouraged people to sort of get married in India rather than go to places abroad. But we all know that the inventory, as far as hotels are concerned, is very limited. In fact, not just for this season, but even for next, hotels are completely sold out. So are there new areas, new geographies which are opening up where you see potential and where perhaps the industry itself can sort of put more money to work?
Very good question, Sonia. I think generally speaking, forget just wedding, I think India has changed and is changing very rapidly. Just think where we were 20 years ago, where we were 10 years ago, and where we are today as the 5th largest economy, and very well poised to become the 3rd largest in 6-7 years, which has a lot of implications because what is driving this is your GDP growth, which means increase in per capita income, which means increase in employment, which means increase in discretionary spend. So having said that, the direct and indirect beneficiary of this is obviously one of the beneficiaries is the hospitality sector. Having said that, number two, there is more and more shift towards spirituality. And a lot of people are including that driven by defining purpose in their organizations. So spirituality is gaining prominence. And I think India does offer a very wide range and a very diversified range of spiritual opportunities. Third is, as you said, weddings. That is a cultural thing. Wedding in India is a celebration. It's a social event, not necessarily related to just the couple that is getting married. So that is there to stay. And finally, more and more, as you said, wed in India, I think it's also was heal in India. There is opportunities for medical tourism. And finally, the 5th point is we are still far away from the pre-COVID foreign travel arrivals. At some point, that is going to level off and increase than what it used to be. And I think all these factors make hospitality sector uniquely positioned in the next short-term, mid-term, long-term, sure. I would say in all possible phases.
You spoke about spiritual tourism, right? Currently, you have hotels in over 50 temple towns. Would you be looking to expand your foray in the spiritual tourism space? If yes, can you give us some details on what the next 12 to 18 months could look like?
A lot, Sonia. We just opened last week our 2nd hotel in Tirupati. We have signed 3 in Ayodhya. We are in Haridwar. We are in near Rishikesh, which is called Anand Kashi on the Ganges. We have the Taj in Rishikesh. We have 2 hotels in Katra. We are in Madurai. The list can keep going on. I think very important is the spiritual destinations, with the exception of COVID, are really crisis resistant. People go there for a variety of reasons. People go there out of joy, people go there out of sorrow, people just go there because it's a part of your culture and part of some of the things that you are taught to do in your spiritual education. So I think the more we can get, the happier we are, and also not just Taj, to extend it from ginger positioning till Taj and whatever else comes with it. I think this diversified brandscape will really help us to support spiritual tourism in the years to come.
Puneet, hi, good morning. A couple of questions. In Ayodhya, with all the inventory, how many room keys will you have? How many rooms will Taj have?
See, at the moment, we are close to what we have signed up. We are close to 350. But what we have in mind is around 750 keys over the next 5 to 7 years, because we still have to cover the Taj brand. We are there with the 3 other brands, plus the new brand that we will launch, and the new platform that we have acquired with, or the collaboration with Tree of Life. So I think if I add all of them up, we should get close to 750 keys.
750 keys over the, I mean, by the end of 3 years, right?
In 3 to 5, it may take time to build. It's not that easy. So something keeps happening. We would love to build it faster, but something changes. And so I would say let's take 3 to 5 years.
Okay. Just to go back to the question about room tariffs, average room rates. I think in the conference call you did mention that in FY25 ARRs could go up between 10 to 15%. That came as a positive surprise to many who were actually building in lower 5-6% kind of growth. 10-15% on top of what we've already seen in FY24. So just talk to us a little bit about that.
Prashant, what happens is...
Yeah, and just want to complete that point, the fundamental issue is this gap between the number of rooms which are there and the demand, right? And the build-out has not happened. But just looking ahead, because you have a bird's eye view as well about the industry, by when does the gap start to narrow between availability of rooms and demand?
See, the gap cannot narrow fast. So that's the easiest one to answer, because as I just now said, for Ayodhya, for our own portfolio, it just takes time to build and finish properties. So that's one reality which we have to learn to live with. Important is what I said at the outset. The landscape has changed. If you become among the top 3 economies of the world, the consumer behavior also changes. The consumer behavior cannot stay the way it was when you were number 20 or number 15 and number 10. So I think there will be a constant evolution of consumer behavior, and this sector, from being perceived more as a luxury or discretionary, is very rapidly moving towards becoming a consumer sector. It's more like a need sector. So if you travel to places, you need a place to stay. It's not just for leisure. For business, as our tier 2, tier 3 cities open up, as there is doubling of airports, as there is renaissance of train stations, all this and the investment generally in infrastructure is going to drive a lot of supply, but that may take next 5, 7, 10 years to come. But there is nothing that suggests that the corresponding increase in demand will not be there. So supply is definitely needed, and more supply is needed, including in metros. But the demand will continue to increase too.
Okay, all right, Puneet, you're sounding so optimistic about the ARRs going out. I think I'd rather focus on Ginger Hotels. Tell us, how is that brand shaping up? What's the current revenue you get from that brand, and where is it headed? And also, you've recently opened the Ginger Hotel here in Mumbai. What's been the response?
The Ginger Hotel in Mumbai, month to date, is almost at 90% occupancy, edging every day closer to 7,500 rupees achieved rate. We are very pleased with that. We are thinking just that hotel has the potential to do 100 crore revenue next year, in the next financial, which will be its first full financial year. And hotels like those are expected to drive margins north of 60%. So I think we are all in all very pleased with the reimagined Ginger, which is, we have also given that guidance, which is expected to do revenues north of 600 crores in next fiscal. And it's one of our fastest growing and profitable business after the Taj brand. Now, I would suggest to you to try that property and brunch on a Sunday. But please don't forget your Taj, because that should stay close to the heart of every Indian.
Absolutely.
Well, we are waiting to try all of this and more, right? I mean, it's clearly wanderlust is what we feel now. Given, I mean, there's so much FOMO about travel these days because things are picking up in such a big way as well. So thank you for that recommendation. But any fundraising plans from your end? Any acquisitions that one can expect on the anvil?
We are very well positioned. We are a net zero debt company. We have a healthy amount of cash reserves. Anything that comes up, which makes sense, we will definitely look at it, but only on the Indian subcontinent. We are not going to invest when the growth is happening here, the action is here. We are not going overseas and investing monies in other geographies of the world. And on the statement Nigel made on being optimistic, this is across the sector, across the globe. All companies are announcing record quarters, record financial years. And at the outset, I think I was asked, how does Q4 look? Also by Nigel. It is moving in the same direction, including the Q1 of the next financial year.
Okay, all right. Puneet, always good speaking to you here. Thanks so much for joining in and giving us all of those details. Wishing you all the best and we look forward to having a chat with you after the end of this fiscal as well.
Thank you. Thank you.
We'll slip into a short break. On the other side, we'll